Right, several banks declaring their Q1 FY25 provisional numbers. We also had Capital Small Finance Bank declare their numbers, and just for perspective, very strong growth both on advances as well as on deposits, especially on deposits, and this is a sub 80% CD ratio, which is credit to deposit ratio kind of bank, and therefore very interesting. We have with us Sarvjit Singh Samra, who's the MD CEO at Capital Small Finance Bank, to talk to us. Welcome to NDTV Profit, sir. Sir, just talk to us about how growth is coming in for you. Q1 is generally a softer quarter when it comes to lenders. But talk to us about where, how and where are you seeing growth visibility, especially in Q1 as well as in FY25 as a whole?
Yep. With regard to Q1, as you rightly said, it is a bit slow quarter, but it has been this quarter has been robust. Like, I want to share the disbursement numbers with you. The disbursement has been 754 crores, which on quarter-to-quarter growth of 12%. So growth is coming from the key drivers are MSME and our trading book and trading loans and mortgage lending.
Understood. And so, you know, your margins currently are sub 4%. And I'm not talking about Q1 FY25. I'm just talking about the general, you know, the slightly more longer term horizon with which an investor should look at Capital Small Finance Bank with Mr. Samra. So how should one look at it? Your current margins sub 4%, you're targeting 4.5%. So what exactly are you investing in, or what are the various loan levers for you to increase your margins by almost 50 to 60 basis points?
The key driver for this is going to be the growth in CD ratio. If even I share with you the number for the current the Q1, which we have closed at an average CD ratio of 79%, where we want to take this CD ratio to mid or high 80s. So this will result in NIM expansion. The major push for margin growth is going to come from the push in the CD ratio, and of course there's a leg room to increase the non-interest income also, which we are working hard, which was 0.8% last year, which we want to take it to 1% plus going ahead.
Okay, so those are two key levers. I want to talk a little bit about your incremental growth in Q1 FY25 with regard to loans versus deposits. Deposit growth for you has come in stronger than loan growth on a sequential basis. So talk us through what's helping that deposit growth, because we're seeing some of the larger banks really struggle with regard to deposit growth, where you've done very well on that count in Q1.
There are two things I want to share. One is the legacy of we being a banking company for 24 years plus, because we converted from a local area bank and we have been into this retail. We are a retail deposit franchisee for last more than 24 years. So we are into a branch-led business model and our target is middle income group segment, both for loans as well as for deposits, where our endeavor is to become the primary banker of this segment, and we target those set of customers. So that results in a stable and a good growth. And even I want to share with you that during the Q1, we have improved our CASA ratio as well, which is presently on Q1, it has improved to 39.5%, which last financial year closing was 38.3%.
Yeah, I take your point on both those, but give us reasons. Is it the higher rates that you offer which is proving to be more attractive for your customers? Are you expanding geographically, which is what is helping deposit growth? What's really giving you that push with regard to deposit growth?
Main is, as I said, is a legacy of being a deposit franchisee, and we know, and we are into this business for more than 24 years plus, and we are into a branch-led business model, and geographically also that's the reason why we have maintained a contiguity in our expansion, so that the customer connect becomes easy. It is not that we are attracting deposit by paying more. I'm glad to share with you, on savings bank we pay 3.5%, the CASA figures numbers which I have already shared with you, and even on say fixed deposits, we are slightly above the HDFCs and ICICs of the world, and we position ourselves to be there. So it is the customer connect, and again with the targeting a niche market, which is the middle income group, of which we want to become the primary banker, where like we give this journey to our target segment, that their present and their incremental needs. We are a bank for this segment, and a customer, we have seen that customer stickiness also with us, where our rollover ratios even during COVID and always it remained above 90%. So,
Understood.
Yeah.
Got it. And so what's the kind of growth trajectory that you're looking to grow at for the next 3 years or so? How's the journey going to be? Is mid-20s kind of growth something that one can expect from you, given that your size is quite small, at least as of now?
Yeah, actually, the current year growth is that we have targeted is 22 to 24%. And this mainly growth is going to come by sweating the existing infrastructure, which is the branches. We have 177 branches. In the current year, we are adding from 24 to 26 branches. But these branches will give a push mainly towards end of this financial year, or maybe the more favorable results from the new infrastructure is going to witness say in the next year onwards. Pre-COVID level, for all these years, we have grown a loan book at 34% plus, and even during COVID also around 21% plus. So we otherwise we see that the way the country is progressing, and the GDP and the middle income group GDP, which is higher than the country's GDP. So we want to grow a multiplier of that we see that there is there's a good tailwind available to push the growth further in the years to come. As say we'll keep on adding new branches, keep on sweating the existing infrastructure, the growth numbers from year to year onwards will witness a growth. Yeah.
Understood. So, large concentration out of the 177 branches that you just spoke of, you're going to add 25. So that's a substantial number given the base. Now, a large number of that is concentrated in Punjab and Haryana. To be absolutely precise, almost 170 branches out of the 177 come from these two specific states. What's the strategy going to be like for the next phase of growth, the 25 odd branches that you're going to add in the current year? Is it going to be existing states? Is it going to be new states? How are you going to grow?
The target that we kept for ourselves in a future branch expansion, that 50% of the branches, new branches that are going to come, are going to be definitely out of Punjab. And there's still a lot of leg room available in the Haryana to grow for us, but we are adding a new state also in our current growth phase, and we'll keep on adding states further. We are maintaining a contiguity. We are presently in 5 states of North India and the Union Territory of Chandigarh. We have maintained a contiguity in our expansion, and going ahead also, we'll keep on adding more states. And definitely, why the Punjab number looks high is that when we were a local area bank, we were confined to a very limited territory within the Punjab. We were only in 5 districts. The 47 branches which we converted, which were in year 2016, which have now grown to 177, we were confined only to 5 districts of Punjab. So there was enough legroom available in Punjab at that point in time for us to expand, and then we onboarded the neighboring states of Haryana, further Delhi, Rajasthan, Himachal, and we are adding now Jammu, and we'll keep on expanding like this and maintain a contiguity. This is with regard to the model, the business model into which we are. We feel that contiguity helps us a lot to carry our brand forward, and that also most efficient way.
Sure. So before I come to asset quality and ROA, if you can give us some outlook with regard to where the loan mix goes, because currently you've got around, just for viewer reference, you've got 37% of your mix in agri loans. Mortgage is around 25 odd percent, and you have MSME which is around 20%, and other loans which is around 15 to 17%. So and the other loans also has some unsecured. So talk to us about secured versus unsecured, and how this book will evolve as you grow at, you know, roughly 25%, 20 to 25%.
Just one, I just want to have one pointer over here.
Sure, please.
Otherwise, our total loan portfolio, 99.8% is secured.
Okay, sure.
Yeah, because we are mainly into secured lending, and going ahead also, we will be pushing the secured lending.
Understood.
But the major growth driver is going to be MSME, the traders, and mortgage. So, like we have three buckets of products, which is agri, MSME, and of course mortgages. So the major push is going to be from MSME and mortgages, and slowly the agri number will dip down.
Right, it's been a pleasure speaking with you, Mr. Samra, understanding all of those aspects. I look forward to talking to you post your Q1 numbers. Of course, would be great perspective, and good to see the journey of this small bank blooming. Thank you so much for speaking with us.